My name is Paul Locke. I'm the Managing Director of Flagship Minerals. Flagship Minerals has two projects in Chile, the Pantanillo Gold Project in the Metallurgical Gold Belt and the Rosario Copper Project, which is 10 kilometres north of El Salvador. Our focus is the Pantanilo Gold Project, 1 million ounces, 80% measured. We see upside to 2 million ounces without drilling. We're going to convert it to JORC under ASX rules. We should have that done by October and November, and then it's more upside after that.
Good, Paul. I could see it's been a while. Last time we spoke, we were talking about lithium. Is it just a slight aside? Is lithium dead or just dead for now?
I think lithium's dead. We had lepidolite in Asia. I think strategically it all made sense, but there's spodumene pouring out of our ears and brine. And the reality is, even if lithium doubled, that hole is going to be filled. So we are really moving into copper and gold, and the key reason is big diverse in both metals, very diverse supply, very diverse offtake. As long as we're producing cathode or doré economically, we have a market. If we go into minor metals, there's a whole heap of issues around sales, including qualification periods, much different market, so it's not our game.
Right, okay. So staying with the kind of core metals for the market. Let's just take a look at let's take a look at you actually. I want to reintroduce you to folks again. So maybe give people a bit of your background. What have you done before, and sort of relative to, I guess, to what you're trying to do here today?
Yeah, of course. I used to work with Rothschild, trading commodities, derivatives on commodities, and before that with Marubeni, trading commodities. Then I moved into project finance with one of Australia's largest project finance banks, Commonwealth Bank, or CBA. So they used to be lead arrangers generally, joint lead arrangers. Cut my teeth on resource project financing there, and then from there moved out and entered the exploration game, expecting things to move faster. So in around 2012, we went to Asia, looking at Myanmar first when I opened up for all things magnificent, and we've slowly worked our way around to copper and gold in Chile. So I have a strong project financing background. I understand the markets, and I've worked around projects.
Okay, and talk to me about your team. I mean, what do you guys know about Chile for a start, I guess?
Okay, so when we entered into Chile, that was when Boric announced the National Lithium Strategy, which was mistakenly referred to as the nationalisation strategy, and we built the Tama Atacama Lithium Brine Project, and that is at 1,000 metres, and we acquired about 1,200 square kilometres of brine exploration property. That was really our first real introduction to Chile, and the way we went into that, we got quite a good reputation in Chile because it was a big project, it was fast, and it was all fresh ground. As a result of that, we made a lot of contacts in Chile, and now we're getting a flow of projects. So through that process, we learned the application process, we understand the permitting system, we understand all the intricacies around that. It's actually quite an exciting permitting system to work with, and you've got that experience there. And out of that and those connections, we got the Rosario project and the Pantanilo Gold Project, and we've actually got a pipeline of projects we're looking at the moment. So we're looking to build a portfolio of quality copper and gold.
Right, okay, well let's just talk about that, okay, because you do have Pantanillo and the Rosario Gold, and then Rosario Copper projects. Like, you know, at your market cap with the cash availability today, I think most people say you got to get focused. So talk to me about that kind of portfolio approach.
Where we are focused, 80% of our time will be on Pantanillo. It's all about building that resource, getting through to feasibility. So that's really where we want to be. But we're also conscious that we're entering into an environment, or we have entered into it, where the fundamentals underlying gold and copper are really strong. And our view is that we can secure projects without much commitment. And when these markets start to really boom, we're there. Because when they do, you're not going to be able to buy a project cheaply. So it's all about strategic holdings. but the real focus is on Pantanillo, and taking that project through to feasibility as fast as possible.
Right, and are they quite close to each other? Is it?
The Rosario project's 10 k's north of El Salvador, and you can from there go through onto just near Sala de Maracunga, and then you head south along that sort of flat, elevated brine country to Pantanilo. There are three roads, three very high quality roads leading to Pantanilo, so it's quite easy to access, very easy to access actually.
Okay, so right, we're going to focus on Pantanillo then. Gold, obviously, ripping at the moment, but not for explorers, but for developers and producers. It's kind of moving. What do we know today about that project? What did you buy? What did you inherit?
So what got us really excited about this project is there's a number of factors. It's got 1 million ounces of gold, 1.05, 80% is measured, and 20% is indicated. This is largely oxide and mixed. So the project was owned by Anglo. Anglo did a farm out with Kinross and then Orosur. Then in the mid 2015, sort of the teens, when gold came down to 1,000, 1,100, Orosur pulled out, and then Anglo let the project go, and it was picked up by some Chileans, and we cut the deal with the Chileans. Now, what got us really excited is Rio 2 is 35 k's to the north with their Phoenix project. So we announced this project in April 14. We started our due diligence in mid-February, and Rio 2 was just permitted, fully funded by Wheaton Precious. They've got an ASIC of 1237, Capex of 117 million, and they're working on a proven and probable head grade of 0.48 grams a tonne. So Pantanilo is 0.69 grams a tonne, so it's a 40% higher grade over Rio 2's proven and probable, and it's about 80% over Rio 2's measured and indicated at 0.37 grams a tonne. So we had the grade we needed, but then did we have the ounces there? And the pit shell was cut on a 0.3 cutoff and a gold price of $10.35. So Rio 2 and Vulcan are working on resource cutoff grades of around 0.15 to 0.2. So there's instant upside there. And then the economics have certainly changed with the gold price 3 times as high. And even though there's been inflation in operating costs, you can still build a much different pit shell around the drilling that there is there now. So this is supported by 20,500 metres of drilling, half of it's diamond. The deepest hole goes to 600 metres in vertical distance, ends in mineralization at 0.7 in the sulfides. So what we've got, and on top of that, we've got 5 to 6 kilometres of strike in alteration. So we're seeing the potential to take the current million ounces of MRE to close to 2 million ounces without drilling a hole. And that's just looking at our pit shell and economics. Then we can move along strike and we see upside there, and then we can go down dip into the sulfides and there's upside there. And then on the block, there's another 5 alteration targets to look at.
Right, so I guess coming back, Paul, to how we can sort of see where the Phoenix project is, the Rio 2's project is at the moment. You've kind of got to, and I appreciate the grade comparison, etc., but you've got to build the ounces there. I expect, or do you actually? Let's think about that. We're seeing a lot of companies kind of moving into getting going with kind of smaller projects, smaller kind of capex requirements, but trying to drive that revenue, make a sort of anti-dilatory statement about how they fund the rest of the project. Do you build it big, or do you get going and then build it big?
No, look, there's a couple of ways to approach it, but out of the box, what we're looking to do, Matthew, is increase we've got to JORC it under ASX rules. So that's the first step. When we do that, we're looking at cutoff and economics. So we think we can take it to somewhere between 1.75 and 2 million ounces. Because we're at surface, this is sort of, bulky, consistent, reasonably consistent grade, heap leachable stuff. Conversion from measured or conversion from a resource into a reserve should be pretty simple, and I don't think we'll lose much in that. So we're thinking if we're at, say, 1.85 million ounces, we lose 15% on conversion into proven and probable. We work with a conservative overall recovery of, say, 65%. So it's 85% in oxides and, say, 50 to 60% in the mixed zone. That'll get us to 100,000 ounces for 10 years. And that's good enough to get, Wheaton Precious or Franco-Nevada or someone else interested in the project. We think we can do that very quickly, and we're moving into feasibility. And so we think we can actually be delivering at least a pre-feas by the end of next year, which is pretty quick.
Yeah, well, absolutely, and it's certainly in a market like this, people are excited about revenue potential. So there's a kind of capital preservation model here, which you can increase the size of the project and maybe show some economics into PFS by, you said, the end of next year. And you're also talking specifically there about royalty and streaming companies as an option. Do you not see the ability to go and raise equity in a market like this? Why are you talking royalties?
Actually, the reason I emphasize that is purely because we have two companies around us, so Rio 2 with Wheaton Precious, and we also have Hochschild Vulcan project 12 kilometres to the northwest with a $15 million line to fund their feasibility. So in this market, it's really fickle, and we've got a growing emphasis on the Lassonde curve. So I was just at a conference, and in the lead up to the Sydney Gold Conference in October this year, the promoter said there's going to be a session on the Lassonde curve, etc., etc. And so it basically is built in. It's a done deal. As soon as you announce your feasibility, your share price will drop. That's what I think anyway. So if we have a pathway to alternate financing, and that would be one of the royalty streamers, then we beat the Lassonde curve. But that doesn't mean I'm not going to look at traditional equity and so on. I just want to emphasise that we have a pathway to beat it, because I just feel that in this market, maybe it'll change. It's a self-fulfilling prophecy right now.
Okay, but between now and then, you've got to show a kind of route to be able to have those conversations, to be able to negotiate those deals. So coming back to the JORC and the PFS, I mean, how much more work, how much more cost we define the timeline is there, and do you think again in this kind of current market cycle that's going to be an attractive enough story for whatever money you need to raise between now and then?
Yeah, for sure. What I'm seeing in the market is big ounces are attracting dollars, and some sort of suggestion of good economics is attracting dollars. So one of the key benefits of Pantanilo and what we have is that we can convert to JORC and add these ounces without drilling a hole. So we've got 20,500 metres of drilling there. It is measured and indicated now, and looking at the cutoff and the cross sections and plan view of the pit shell, we can actually see the ounces in between 0.3 and say 0.15. So it's sitting right there, and we've got drilling under the pit, some fantastic drilling. We've got one cross section, the pit's about 100 metres deep. There's a drill hole 161 metres at 1.23 grams a tonne, starting at the bottom of the pit and going straight down. So this can come straight into it. It's all there for us. So to answer your question, I think we should get through to a JORC resource and close to our 100,000 ounces for 10 years without drilling a hole. And then that gives us what we need to go raising money if we want to extend along strike and at depth.
Okay, drilling bit's expensive. You don't need to do that, which is great news. It's a kind of desktop and consultancy exercise. How do you finance that, and do you think that is going to be attractive if you can demonstrate 100,000 ounces for 10 years.
To convert, I don't think it's going to cost more than a couple $100,000. So it's going to be a pretty cheap exercise. If 2 million ounces, say, and a lot of upside around it is not attractive, then I'm going to go and find another job. What is attractive? I mean, seriously. And some of the stuff I'm seeing, you see there's some companies, they've got exploration targets and market caps of, plus $1 billion. And you can look at those and look at the economics, and that it's going to be it's not going to be shoot the lights out. But what we're looking at here, and we've got Vulcan's PEA, we've got the Phoenix, they're in construction. So Vulcan's PEA has them producing at $1,002 an ounce, and Phoenix at $1,237. I think we'll land somewhere between that. That's a fantastic sort of pathway to a good outcome.
Right. Okay. You'll see had a crack at putting out some metallurgical numbers. I think you retracted that. So, but you have mentioned a range of numbers here. You've got some clear benchmarking with operations near you. So, are you going to do more work on that?
Yeah. So the reason we had to retract the met work, and if you've read our retraction, it's actually quite a nice statement, because we probably provided more information. But the reason is there's a large amount of met work there. I think Kinross did 1,300 bottle roll tests. Rosario did a lot of met work. They had a big fat met hole right in the middle of it. But under ASX and JORC guidelines, we need to provide the collar coordinates and the to from in the hole. We can't provide that until we've gone through the data room and sorted all that out. So ASX was really great. We negotiated that retraction, explained it to shareholders so they understood, and we'll just sort it all out and come back. And the data is the data. It works. It's just a matter of semantics.
Right. Okay. So in terms of and moving towards a PFS, I mean, there's some historic costs here, but obviously the world's a very different place now. So this isn't a simple case of going from 1035 US gold through to 3,500 gold and multiplying by 3. Yeah, which some people might like to do, because the margins will be good. But how do you kind of quickly move to try to understand what a heap leach project in Chile is going to look like? Do we just look to Rio 2? Do we look to Hochschild? I mean, what are we looking at?
Yeah, definitely. Oh, well, so both Hochschild's Vulcan project, their PEA is mid 2023, so it's fairly current. And Phoenix is funded, and their numbers I think are 2023 too. So not much has happened between then and now. So with a PFS, you get different ranges of PFS. You could something close to a scoping study or something closer to a DFS, but we don't. It's not a DFS. We don't have to go out and get 2 or 3 quotes for each item. We can use our neighbours and what they're doing, a bit of ready reckoning. If we use the right consulting firm in Chile, it'll be a good document. And this is the beauty of it. We have two projects, same geology, geography, permitting environment, with current data. So we're not sort of out there in the forest by ourselves.
Okay. And again, looking to your neighbours, I'm going to talk to you about the EIA process. How are things in Chile?
Well, I'm hoping there's no chinchillas on our property. But Chile just brought into a law an initiative to reduce permitting times by 30 to 70%. So I think the driver there is what's happening in Argentina. Clearly, Argentina, if you look at lithium as an example, are kicking a lot of goals there, whereas Chile's sort of, dragging their feet a bit. But this is also very relevant to gold and copper, which where we're focusing. And this is really important. So, Rio 2 had a bit of a delay there. I think with this new initiative, that sort of delay can be avoided. Further to that, I was listening to Barrick's, I think his business development for South America, something like that. And he said, look, there's some fantastic stuff in Argentina, but you don't have the infrastructure. We'll build in Chile any day because we've got the roads and power lines. And one of the fantastic things about where we are in the Maricunga is the Kinross Maricunga project is about 25 k's to the west, and there's a power line straight to there. So I would imagine that Hochschild and us will come to some sort of arrangement to share that cost over to our property, and so on. So we've got all the infrastructure, we've got the new permitting regime. I think we're on a good wicket to produce a great outcome.
Okay. Yeah, it's certainly been interesting the past few years from that perspective. So just in terms of how I can go away and do some numbers around assumptions, etc. Run of mine dump leach, which I think is what Rio's using, versus conventional heap leach with kind of, I guess, minimal crushing. What when you're looking at the composite structure, can you give me a sort of range in terms of the capex envelope that you see?
So Rio 2's Capex is 117 mil as a dump leach. So when they did their mets, their I can't remember what the crush size was. I think it was maybe 28 mils passing 100% or something, but they worked out that they could get the recovery up to 85%, but the cost of the capex, additional capex to do that wasn't worth it. So that's why they moved to dump leach, far simpler, and they're using the blasting strategically to break up what they're doing. We're in very similar geology, so we'll look at both, but I think we'll produce a capex outcome similar to Rio 2. Oh, I can't see why not. We're looking for similar ounces. We'll be moving less dirt. I expect we'll be moving less dirt. So, conservatively, I think it would be similar. Does that answer your question?
Yeah. Well, look, it's one of those things. I'm not asking you to foresee the future, but just to get an indication of, so for people listening to this, watching this, reading about this, the range and parameters, because it might help them try and understand the potential cost structures, and also, I guess, margin. At the end of the day, it's always going to be about margin.
Well, if we just use Rio 2 at 0.48 and 1237, and they're trucking water, that's a pretty good outcome. If you put Rio 2 on the Australia-New Zealand producers cost curve, they're in the bottom eighth or 10, bottom 10%. So with a higher grade, I think we'll have better access to water where we are. I think we'll be producing something between Rio 2 and Hochschild's 1002. So right. I think the economics will stack up.
Okay. So I mean, just on the waterfront, I mean, obviously you've got to look to that. Whether you're, what have you done about that?
There's a lot of old mining to the west of us in the Andes as you head down towards Copiapó, and our advisors in Chile have said there's water there. You just got to know where to look. Water bores. Interestingly, Hochschild has 2 water bore licenses. Golders did some work on those, and at 124 litres a second each, they've got a 30-year life. Hochschild needs 105 litres a second, so there could be an opportunity there. So our worst case scenario is we do what Rio 2 is doing, and we truck water. Our middle case is there's water bores around us. Our upside case is the pipeline, which is on the plan to come up into the Maricunga, and also down below and towards El Salvador, where some of the new copper projects can use it. If the Barrick Newmont North Alberto, I think it is, project gets permitted, we could almost guarantee that pipeline will be built, but we're not banking on it. That's not part of our plan. We'll find the water around us.
But you guys are, I'm just looking at the structure of the team here. How would you describe yourselves? Are you explorers looking to take this through to, whatever economic study phase and flip this thing, or is there genuine intent?
We want to build a project. Once we get a cash flow, then we can look at growing the company. So I see the hardest thing to find as an explorer is a project that's doable. So I'm on the ASX, so I look at the ASX a lot, and we've got 750 materials company. I could probably discount 650 of those as it's never going to happen, having been a banker and all of that. And so I'm an ex-banker. David Hobby, our chief geologist, is a economic geologist. whenever we look at a project, it's all about, can we actually do something? And if it's pre-drill, you don't know. You could kill it on the first drill, well, pretty quickly. But when we look at Pantanilo, we look at a project that has the ounces, has the infrastructure, has the precedence. We're in a country that's a tier one copper gold producer. It is mining oriented. Its permitting process is structured for mining. It's just put in place law to reduce that permitting timeline. And then we look at what's being banked, and similar to us, what we've got is being backed. All of that makes a real project. So finding something like that is really hard. And being the largest shareholder in the company, having invested a lot in the company to ensure that the incumbent shareholders aren't diluted to buggery, and then you sort of wonder what you're doing here. Our objective is to build a company that's producing a revenue, and then we can move to the next step, and that's acquiring some interesting projects. So that's where my real interest is.
Okay, so if I look at your enterprise ounces ratio, you're about $12 versus peers 90 to 100. You've mentioned quite a few things that you're going to be doing, but do you think that in itself will be enough to kind of, change your fortunes, like change that disconnect between you and your peers, or are there more components which perhaps you're not in control of? So how do you view this valuation disconnect?
A big part of the valuation disconnect is that we, until April 14, we weren't in gold. And so no one knows us. And I was at this conference last week, and a key figure in Sydney had no idea we're in gold. And I thought that was great, because the reason we're not getting any traction yet is people just don't know. So I've been road showing a lot to build that knowledge about what we're doing. I always think that at some point the markets will start to realise where good value is, and that we constructed a peer group, which is true. So the peer group is based on minimum 500,000 ounces of precious, because there's not that many who fit the criteria. So I had to drop the threshold. Minimum 75% in gold or thereabouts, not in feasibility, because then that reflects what we are. And the peer group's a mixture of ASX and TSX and geographies. And that's how we get the average of, and that's probably about the median too, of about $90 an ounce. So an investor who's looking for growth upside, at some point has got to say, okay, I'm holding this project and it's valued now at, if it's an explorer or maybe a developer, valued at somewhere between 90 and $200 an ounce. Am I going to get my 10 times from here? Or should I be looking at the other end of the curve at something like Flagship Minerals at $12 or so an ounce, with a real project, management who understands what they're doing, and a pathway to, plus 2 million ounces. And I know what my decision would be, but sometimes these investors can be a little bit fickle, which is quite frustrating, but I'm pretty sure it'll be realised sooner or later.
Okay. Let's talk about 80-20. Let's talk about the 20%. The Rosario Copper Project. I'm looking at that thing, and on the surface, literally, grades look good, but it's very early stage. So, what are you doing there?
We really like Rosario because it's got about 15 k's of strike in 3 trends, and we've done a lot of channels and rock chips there, so true sampling, not selective. And we've got 100 rock chips which average 2.16% copper with a 0.1 cutoff. So statistically, that you can't really be that selective. And it always worries me when someone's got a rock chip which is that grade, but this is the full set. This is oxide, so we're targeting oxide on this project. And we're hoping it's something similar to Mantos Blancos, or what Marimaca is doing with their Marimaca oxide project. And really, it's the next stage is drilling. But what we're going to do is run some trenches across it. So the mineralization for the eastern zone, which is where we're focusing first, it's about 3 k's of strike. Varies from 20 metres to 200 metres wide, and there's just big oxide at the surface. I think that project's, it's either going to be a bit of a duster in the sense that we 10 to 20 million tonnes of oxide, or it could be a really deep system. And so the trenching will give us some good drill targets, and then we'll go and drill it, and let's see what happens. So it's exciting, but I like to hedge my bets.
Right. Okay. Well, look, it's one of the things. You're not going to spend a ton of money on that. You want to focus on Pantanillo. Makes sense.
Yeah,
Makes sense.
I think with Pantanillo, well, right now our market cap's somewhere between 12 and 15 on any one day, and that will get us to that sort of 100 million market cap, and then we can start raising money more easily with less dilution, and start doing a few things like putting a few drill holes in Rosario, but there's no rush there.
Okay. And when are we going to see you next? What's the next bit of news coming from you?
All right. Well, we should have a lot of data coming out of the data room. We understand there's 32,000 metres of drilling at Pantanillo, and the mineral resource is supported by 20,500 metres. So there's a lot of opportunity there. Then we're going to have the JORC upgrade, and that should see us produce a substantially larger MRE, and then we'll just see what happens after that. So we're aiming for that JORC upgrade in October.
Okay, Paul, I appreciate you coming on the show. Nice to hear another copper story in the market. We need all the good ones we can get. Stay in touch. Let us know how you get on. Okay.
Yeah, thanks, Matthew. Thanks for having me. I really enjoyed telling you about me. Thank you.